So I have to say, we picked these people to be on this panel because this is a very interesting topic. They have multiple perspectives. So we have 3 venture investors, we have a securities attorney, and we have an entrepreneur who successfully started a company from a blank sheet of paper and financed that company through its Series C financing round. So people who are eminently qualified to answer these specially prepared questions. So I'm going to start with a softball question for everybody. We'll start at this end and work that way. So by the time we get to Chuck, there may not be anything to add, but we'll see. It's a softball question to get everybody warmed up, okay? Same question for everybody. What economic and business trends are you observing today? And do you perceive that anything in particular seems to be driving the economy today?
Well, you may have covered a little bit this in your talk this morning, Grady, but the one trend I would point out is that there's a general shift of investment dollars to the right as measured by a reduction in risk. Everything is shifting to the right. With the absence of capital, folks who were doing mezzanine are now making loans that banks used to make. And folks that were doing certain types of private equity are now making investments that mezzanine lenders used to make. And folks that used to do venture capital are now making growth equity investments, and that trend, at least in the region that we look at, which really extends kind of from Albuquerque to Richmond, has been very noticeable, and it certainly affects the decisions that entrepreneurs make going out.
Good morning. Good to be here. Although, Grady, I will say that I'm going to go back to Atlanta and pack up the car and move to Massachusetts after the numbers you showed. But actually, I'm going to stay here and make it happen in Massachusetts. I think from an economic standpoint, anything related to the stimulus dollars has been crazy frenetic this year. Whether it's $50 billion going into alternative energy ideas or $20 billion going into electronic medical records. And after some of those announcements were first made, we had a steady stream of entrepreneurs coming into our office saying, hey, we're going to come up with the best EMR, we're going to come up with the best personal health record. That's died down a little bit, but I think that those ideas will continue to stimulate the market. Now, from a venture perspective, you know, how many EMR vendors do you need? I mean, not a whole lot, right? And how many different $100 million plants can you fund from an alternative energy perspective? But I think it's definitely fueling a lot of energy, excitement, activity, and then just healthcare in general. Again, we have a bias. It's about 50% of our portfolio. But healthcare is going to continue to fuel a lot of economic activity because it's you know, you have to live under a rock not to know that we've got to get costs out of the system. And we've got to be able to take care of 47 million people that could potentially be going into primary care type venues. So that's what we're seeing.
Good morning, and by the way, I do believe that the giant label is going to stick, Grady, so you're going to have to get used to that. Good morning, everybody. One of the things that obviously as venture capitalists we always keep a look on, which is the ultimate exit markets for portfolio companies, whether it's M&A or someday more IPOs. The public markets do have an impact in our outlook. And if you look at what's happened in the last 12 months, clearly there have been some pretty dramatic changes. And it's great that the Dow is above 10,000 right now and the markets are up 50% from the lows. But 100% of that's really being driven by federal printing presses and a lot of the stimulus money, as Kathy said. So the question is, how much longer can that take place? And can it be in place long enough for consumer and corporate confidence to basically pick up the slack? And there's a lot of talk about whether we're going to have a V-shaped recovery or a W-shaped, L-shaped, U-shaped, or even square root shaped. And the reality is nobody knows, but it's going to take some time for us to come out of this. And the real question is, well, how long can the U.S. government and the other governments that are doing stimulus right now basically keep that up before it becomes unsustainable? So I think that's a real risk. The other thing that's concerning as we're looking at doing early stage investing is the U.S. government has become arguably the biggest VC on the planet right now. We're looking at a lot of clean tech deals where, you know, a check from the DOE comes in for $500 or $600 million. That's larger than many venture funds on their own, much less for a single company. So it's just something that we need to take into account as we're starting to look at sectors and individual companies. As long as some of this is not permanent and the government's involvement in certain sectors doesn't stay as high as it is, then we should be able to come out of it fine, but it's certainly an area of concern for us.
Good morning. As counsel to a lot of companies and investors as well, I would say that what I'm seeing right now, generally I would call as a thawing. About this time last year, everything just completely froze up. The economy was just nothing. You couldn't do anything from a young company trying to get a purchase order out of an organization that all of a sudden was under budget review, and so nothing was happening, to a private equity fund that may be out looking to buy the next $50 million company, and all of a sudden it couldn't get financing that it had always gotten financing for before. So this time last year, everything I think was very frozen. Now we're starting to see what I would say is sort of a thawing. You're starting to see deals beginning to get done. You're starting to see what I sort of chatter, a lot more activity is starting to happen. But it's still, no one has confidence that it's still going to get back to what it was. And more importantly, what is the new world order? Who knows? So I think there's still a lot of conservative, slow, prodding type of behavior out there. So if you're an entrepreneur and you're looking to do something, or if you're looking to raise money, right now don't expect anything to happen real fast. Always have a plan B and a plan C and a plan D ready.
Good morning. I would, from a macroeconomic standpoint, I would certainly echo the sentiments of Paul and Kathy. It seems to me that much of what's going on right now is driven by government initiatives, be it clean tech, be it in healthcare, stimulus packages, et cetera. So it seems like that's really driving the economy right now. I pretend to know less about that than I do our specific industry, which is really related to pharmaceutical development. And a lot of the trends there it's an industry that is experiencing extreme consolidation right now. If you've been watching, a lot of the big pharmas are really consolidating and cutting their R&D, which is something that I think is in response to the current economic climate. Makes it very difficult for companies like us trying to sell them new tools. But I think it's of course the natural evolution of industry. And what you're seeing is a lot of pharma that is they're putting their future new development in the hands of smaller companies, specifically biotechs, which is continuing a trend that's been occurring for the last 10, 15 years, but really is, I think, the focus of new pharma development now. And they're focusing on perhaps what they're really good at, which is taking those drugs through clinical trials and then marketing them through their commercials to all of us. So those are some of the trends that we're seeing.
Okay, thank you.